Well, that's the announcement that we've heard out of African Iron this morning. It's confident that the takeover offer that's been made by Exxaro Resources will get at least that 50% acceptance, if not the full 75%. Let's go through the investment case that Exxaro is actually tapping into here and what it's buying into.
Yeah, I mean, Exxaro expressed their interest to expand their iron ore exposure in the past. They've explicitly stated that they want to grow actually their iron ore exposure from own operations to about 20 million tons by 2020. So this is not a new, I think, thing or a totally unexpected transaction that actually happened. On balance, the price looks to around $2.9 per ton of resources which they've offered here, which looks fairly attractive given the cost of between $40 to $45 per ton on the specific project. I would argue there is a couple of risks around this, and the one is the infrastructure that may be required, as a portion of the underlying asset is sitting in lower grade hematite ore, which will likely require beneficiation to up the percentage of iron ore, and there may be additional cost that they will have to incur in terms of that. Mm-hmm. And then obviously, it's in Africa. It's from a political perspective, there's always risk around that. And then lastly, I would argue, Exxaro's management is moving outside the borders of South Africa. And, although the management is very capable and have done very well with the company over the last couple of years, this is in a new geography for them and which obviously exposes.
So when it comes to that kind of risk, then, Kobus, where are your confidence levels sitting in terms of the expertise that Exxaro has to venture down this path and into African territories? Yeah, look, I mean, it's, I guess you got to give them the benefit of the doubt at this stage. The biggest risk, I guess, at the moment for Exxaro is to not be disciplined enough with capital allocation. We've seen their previous bid for territory resources that actually were unsuccessful, mm-hmm. And we've seen good amount of cash flow being generated by this company, and I would argue probably that's the biggest risk, given where we are in the iron ore cycle, sort of investing aggressively now into new projects. Although saying that, it's not a massive investment. It's not a, it's maybe a rand or R1.50 on the share price that you can justify for this additional transaction. So it's not that material, but I guess it just opens the door for what may be next. And also it opens the door for that criticism in terms of whether now's the time to be delving in and making investments at the top end of a cycle, at the higher end of a commodity price range specifically, especially where you touched on earlier, the risk of capital allocations is there, and the company may well be struggling or may well struggle to recoup costs down the line. Yes, and I mean, no one see downturns coming. I mean, these mines tend to, in the past, I guess, of investing at the top of cycles and then, having to come to the market at the bottom of cycles. It's almost more of a reactive opposed to a proactive kind of behavior through commodity cycles. Yeah. And, how many years that we're going to see in iron ore of these exceptional prices is to be seen. We've seen pressures on supply. There's not so much that's actually come through that the market we're expecting. So from that perspective, it has been supported, but it always sits with that cost curve, with the Chinese sitting at the end, which producing at much higher costs. And when you're going to see the volume starting to come through from production perspective from 2013, there's always a risk, given the level of demand that we're going to see at that stage of global iron ore demand, that there's a risk that prices may dip lower than a lot of people think, and then sort of destroying investment cases like this. So let's explore this diversification strategy that Exxaro is exploring even further. I mean, we've seen iron ore rake in a greater component of revenue for Exxaro over the recent past, and overall we're looking at the case of diversification for this company. How does it compare to the coal industry right now? Because in a broad sense, coal is probably seen as the most defensive commodity that's out there.
Absolutely, thermal coal is probably, one of the most defensive commodities in a slow growth environment. And, for them to moving, again, at this stage of the game, towards this, be it 20 million tonne at 2020 or whatever, the exposure of iron ore will increase on an equivalent copper basis then from here on, one would expect. And I guess it's to be seen if that will be the right strategy. Given that there is that the exceptional returns that the miners managed to earn over the last couple of years attracts so much capital into this space, and more likely than not, we're going to see an overinvestment in this space, and I guess that's the biggest risk.
Because as soon as that competitive landscape becomes just that, even more competitive down the line, it's going to skew the entire supply-demand dynamic, and then in turn that price structure from here on out.
Correct, and you could argue, maybe guys like Kumba that operate around about $25 to $30 a tonne for their iron ore is sitting very low on the cost curve. These guys probably a little bit higher on, not too bad. I mean, 40 to 45 is not that bad, but still, when the iron ore price do pull back to 80, and you've got certain amount of capex that you got to invest into infrastructure and all the rest, then your free cash flow margin actually compress, and then the investment just start to look less attractive maybe at this stage, where you may see these very high iron ore prices for much longer.
Well, where we've got investments being made and being, banking on the kind of ramp up in commodity prices we've gotten used to, it'll be interesting to see how this all plays out for Exxaro itself. Thanks so much, Kobus, for joining us this afternoon.